This week, crypto prices struggle as President Trump's push to acquire Greenland hits U.S. markets. The topic of crypto takes center stage at the World Economic Forum's annual meeting in Davos, Switzerland. And Bitget CEO Gracy Chen weighs in on the New York Stock Exchange's plans to trade tokenized stocks and ETFs around the clock. Welcome to CNBC's Crypto World. I'm Talia Kaplan. As we told you last week, we're trying a new format here where we look back at the biggest stories and market moves of the week. Let's start with crypto markets, which as of noon Eastern had fallen sharply amid a wave of geopolitical uncertainty. Bitcoin slumped nearly 10% to the $87,000 level since last Wednesday, while Ether sank nearly 14% to around $2,900. XRP shed at 12.5%. Some key factors adding to crypto's volatility in the last week. Well, the big story came over the weekend as President Trump threatened additional tariffs against Europe in his push for the U.S. to take control of Greenland. The president's push to acquire Denmark's sovereign territory caused a rout on Wall Street, a rise in treasury yields, and a decline in risk assets like crypto. Now, looking ahead for what to watch this week, we're keeping our eyes on comments from world leaders at the World Economic Forum in Davos. And we're also watching digital wallet and custody firm BitGo, which will debut on the New York Stock Exchange tomorrow. It's the first crypto company to go public this year, following a wave of digital asset firms that hit U.S. markets in 2025. Those include stablecoin issuer Circle, Bitcoin miner American Bitcoin, and crypto exchange Gemini. Let's also catch you up with everything happening so far this week. The World Economic Forum's annual meeting is underway in Davos, Switzerland this week, bringing together global leaders, including U.S. President Donald Trump, as well as other political figures and CEOs. And the topic of crypto is front and center. While delivering a speech in Davos today, President Trump brought up digital assets, saying he's working to keep the U.S. the crypto capital of the world by backing crypto-related legislation. He also said he hopes to soon sign a crypto market structure bill into law, citing geopolitical urgency in doing so.
Financing, I'm also working to ensure America remains the crypto capital of the world. And to that end, last year I signed the landmark Genius Act into law. Now Congress is working very hard on crypto market structure legislation, Bitcoin, all of them, which I hope to sign very soon, unlocking new pathways for Americans to reach financial freedom. And I did it for two reasons. Number one, I thought it was politically good, and it was. I got tremendous political support. But more importantly, China wanted that market too. It's just like they want the AI. And we've got that market, I think, pretty well locked up. If I didn't do it, Biden was totally against it until before the election, when they realized that, there were millions of people voting against him over crypto. And all of a sudden they loved it very much, but it was too late. They blew it. But it is politically popular, but it's much more importantly, we have to make it so that China doesn't get the hold of it. And once they have that hold, we're not going to be able to get it back. So I'm honored to have done it.
White House AI and crypto czar David Sachs joined CNBC's Squawk Box today from Davos, where he discussed the fate of the Senate market structure bill, which stalled last week after opposition from industry executives. One big issue in the bill is between banks and the crypto industry. The Senate Banking Committee's text would have prohibited stablecoin issuers from offering rewards simply for holding stablecoins. Instead, according to the proposed legislation, those rewards would have to be offered through the completion of a transaction or something like a rewards program. That's a win for the banking industry, which urged Congress to close what they deemed a loophole in the Genius Act that allowed intermediaries to pay interest on stablecoins. Banks have argued that this would lead to a flight of deposits from the insured banking system, potentially threatening financial stability. Crypto companies, especially Coinbase, have been fighting back against that claim.
I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate banking industry and crypto industry. It's going to be one digital assets industry. And I think
will they be regulated
their opinions are going to evolve over time. And I bet you, over time, the banks like the idea of paying a yield because they're going to be in the stablecoin business.
Coinbase CEO Brian Armstrong is among those executives in attendance at the World Economic Forum's annual meeting in Davos. He sat down with CNBC Squawk Box yesterday to explain why he withdrew support from the Senate market structure bill last week. Following Armstrong's withdrawal, the Senate Banking Committee canceled Thursday's scheduled hearing on a crypto market structure bill. The delay came after intense, ongoing debate over several provisions in the bill surrounding topics, including stablecoin rewards, a major point of contention for Armstrong.
We saw some draft text midnight on Monday night.
Right.
Our lawyers started looking at it on Tuesday. I was in DC on Wednesday. We started to notice some pretty serious issues in the draft text that we had a concern with, and there didn't appear to be a plan to actually get that fixed coming out of a Senate Banking Committee markup. And so we actually felt like we had an obligation to go out and defend our customers' rights and say, we have some issues here. We were careful not to comment on what the Senate should do in terms of markup or not, but they did decide to postpone it, and so now there's an opportunity for us to come back and chat with the bank CEOs and see what would create a win-win outcome.
Senate Banking Committee Chairman Tim Scott put out a statement last week saying bipartisan negotiations are continuing. No new date for a hearing has been set yet. Senator Cynthia Lummis, who chairs the Senate Banking Subcommittee on Digital Assets, told CNBC that it could be a couple of months before the committee can try the bill again. And sticking with Davos, in an interview with CNBC yesterday, Brad Garlinghouse, the CEO of blockchain company Ripple, said he was surprised at Brian Armstrong's, quote, vehemence in coming out against the bill, arguing that the rest of the industry, including exchanges that compete with Coinbase, were still supporting the legislation. Garlinghouse went on to say that he is hopeful the industry will be able to break the impasse. Now, in a separate interview with CNBC in Davos, Binance's co-CEO Richard Tang also weighed in on the industry opposition to the Senate Banking Committee's crypto market structure bill, saying that, quote, any regulation will be better than no regulation. He also told CNBC Binance was taking a wait-and-see approach to re-entering the U.S., which he called a very important marketplace. You might remember Binance, the world's largest crypto exchange, exited the U.S. in 2023 as part of a deal in which then CEO Changpeng Zhao pleaded guilty to criminal charges over the failure to prevent money laundering on the exchange. It was all part of a $4.3 billion settlement with the Department of Justice. All right, for our main story, the New York Stock Exchange is developing a platform for 24/7 trading. This week, the NYSE's parent company, Intercontinental Exchange, announced the development of the tokenized trading platform. If cleared by regulators, it would offer around-the-clock trading and on-chain settlement of tokenized securities. Now, this comes amid growing demand for trading after market hours, with platforms like Coinbase offering similar services to their customers. The announcement says the exchange is partnering with banks BNY and Citi to support these efforts. This afternoon, I spoke with Gracy Chen, the CEO at Bitget, all about this development. Big news this week with the New York Stock Exchange moving on-chain, developing a platform for 24/7 trading of tokenized stocks and ETFs. The move signals TradFi is further embracing digital assets, moving deeper into the space. What do you think this development means for both markets, and what is the biggest change you expect to see?
So I guess for the TradFi market, this is, of course, a strategic advancement to make the TradFi more digital with the help of blockchain and crypto, also more wide accessibility to the global market in terms of tackling into the Asian market, because one strategic move there is to be 24/7. If you notice, it's not just NYSE, it's not just NYSE, which announced this tokenization platform sort of strategy this year, January this year. Actually, NASDAQ also did similar announcement last year, but the goal of NYSE, NASDAQ are pretty much similar, that they want to use blockchain technology. As we pointed out earlier, like we are, of course, a strong belief of using this technology to make traditional financial world more efficient. So I think great minds think alike. NYSE and NASDAQ also see that trend. And then for the crypto world, I guess this is beneficial for some specific sectors. For example, US compliant stablecoins like USDC, because NYSE explicitly mentioned that it would introduce stablecoin-based fund settlement, and under stablecoins under the Genius regulatory framework, in my opinion, are going to be chosen. And in that case, USDC is the leading player within the US compliant ecosystem. So definitely beneficial for that. And then for some trading platforms, like even us, we introduced the concept of UEX, Universal Exchange in 2025. We're probably the largest UEX platform right now. So I would say this conjecture assumes that NYSE's tokenized stock trading platform doesn't really support leverage trading, but we do. So more market will demand for leverage, and if NYSE omit the leverage services, I think more risk-seeking users will still place order in some crypto stock trading platforms, including Bitget, Hyperliquid, etc., that offer such features. So definitely beneficial to the crypto industry in general by bringing more liquidity, being more compliant. But I would say these two sectors will benefit the most: stablecoin, fully compliant stablecoin, as well as the crypto stock contract trading platforms.
So how do you think developments like this, things like 24/7 trading and tokenized stocks, could reshape investor behavior?
Investment behavior, I would say, first of all, as I mentioned earlier, that Asia can be better covered. Asia never sleeps, and neither should their portfolio. So 24/5, 24/7 trading hours can attract more Asian Pacific investors. And then another trading behavior that would change, in my opinion, would be in terms of the settlement. For example, if you want to do a trade by, for example, if you want to sell your US stocks and then buy maybe commodity like gold, which is growing very fast recently, right? So a cross asset trade like this, you at least need two accounts, maybe 3-4 different transfers and 2 days of waiting. But in tokenization, in the on-chain world, it's just one signature, 10 seconds, it's done. So it's not just an upgrade, it's more like a time machine. More activities like this can be settled really fast, and that's the magic, that's the total power of blockchain. So I would say that's the second users behavior that we will see. Another thing that I'm expecting is more around the compliance about RWAs. Although this is it's not that investor specific, it might be more regulator or platform specific in terms of a behavior change. Regulations now is much clearer. It's not just a wide west. Now it's zoned land with building permits in terms of RWA, reward assets, as well as crypto, stablecoin Genius Act, Clarity Act, etc. So trading platforms like this like NYSE and Nasdaq now can embrace the asset tokenization in a more compliant manner.
Now, another big topic this week, all eyes are on Davos, where world leaders and business leaders are gathering for the World Economic Forum's annual meeting. And crypto is certainly a topic of conversation. We heard from President Trump, who actually mentioned digital assets in his speech today, saying he hopes to sign a crypto market structure bill into law soon, stressing geopolitical urgency. What do you think about the fact that crypto is in focus in Davos right now? And how would you rate America's moves as it relates to crypto regulation, especially compared to other regions around the world? I know you're speaking with us from Hong Kong, places like Hong Kong, the EU, UK, and Singapore, for example.
Mm-hmm. Well, that has different facets. If we are talking about stablecoin or crypto assets, RWAs today, ETFs, capital inflow into Bitcoin and Ethereum, US definitely has a lot of say. Wall Street is the main pricing power of these different asset classes and the trend there. So in terms of a global geographic tension, I'm not a political expert, but I do think various countries and regions have very different approaches. I, as a crypto industry personality, I definitely support a very clear regulatory frameworks like what Europe MiCA is offering, as well as the US is offering. Maybe exchange business wise, US can improve right now they only allow exchanges like Coinbase and Robinhood to do that business. I would love to see more clearer regulatory framework towards other offshore exchanges, global exchanges, etc. But stable coins, again, Genius Act, it's quite clear. It's very supportive of the U.S. crypto economy. And that gives the United States an edge in terms of, for example, having more scenarios, ecosystems holding U.S. treasuries. As we know, stable coins by Genius Act, they all need to buy T-bills or similar very short-term U.S. assets. And it is increasing the power of US dollar. 99% of the stable coins today are USD pegged. Tether, Circle, and a couple of others are the major market players there. So that definitely helps the US to continue the US dollar kind of power over the world. And then for Asia, I definitely think, China, Hong Kong is a little bit slow in terms of regulation. I've heard and participated in some discussions around globalization of RMB, Hong Kong Stablecoin Act passing, and how that supports, for example, crypto world and DeFi world. The progress there is much slower in Asia, but Europe and US have a very fairly good approaches and progress.
Okay, that's all for Crypto World this week. We'll be back again next Wednesday, January 28th, and we'll see you then.